Picture this, a CEO in a sleek office making million-dollar decisions. Now, contrast that with ancient figures planning massive structures like pyramids. What's common? The concept of capital budgeting. Yes, you heard it right, capital budgeting. It's that crucial process that helps businesses determine whether their investment projects are worth the capital they're committing. It's this decision-making tool that has shaped and continues to shape the world we live in. From the construction of the Great Wall of China to the launch of the latest smartphone, capital budgeting has been at the core of it all. And today, we're going to delve into the remarkable journey of capital budgeting. From its humble beginnings in ancient civilizations to the sophisticated techniques of the modern digital age. So buckle up as we embark on a historical exploration of capital budgeting. The seeds of capital budgeting were sown way back. Think pyramids, temples, medieval bridges and harbours. Yes, folks, even the ancients had a sense of capital allocation. They might not have had fancy calculators or spreadsheets, but they were planning and budgeting for large-scale projects. How do you think they managed to build those pyramids? It certainly wasn't a spur-of-the-moment decision. Fast forward to the medieval era, where trade was booming. Bridges and harbours were being built to facilitate the exchange of goods. Again, this required meticulous planning and allocation of resources. Merchant empires were sending ships on exploration missions, investing in vessels and crew. But the data analysis was limited, and a lot was riding on experience and gut feel. So, in those days, budgeting was more about instinct than figures. But oh, how times have changed. If you're this journey through financial history, don't forget to hit the like button and subscribe to our channel for more. Enter the Industrial Revolution, and things started getting serious. From the spinning jenny to the steam engine, the world was experiencing a seismic shift, and so too was the concept of capital budgeting. As factories and machinery became the new norm, the complexity of investment decisions increased exponentially. Business owners couldn't rely on instinct and experience alone. They needed a more systematic way to decide where to put their money. Thus, the emergence of formal budgeting practices. It's like when you're deciding whether to buy that fancy espresso machine for your home. You don't just consider the price tag. You think about how often you'll use it, the cost of a cup of coffee at your local cafe, and how much you value the convenience of making coffee at home. Now imagine making that kind of decision, but with a factory. This is where the concept of return on investment, or ROI, comes into play. The basic idea is to compare the money you expect to make from an investment with the cost of the investment itself. If the potential return outweighs the cost, it's a thumbs up. If not, it's back to the drawing board. To put it in a nutshell, it's like dating. You invest your time and emotions in someone, hoping that the joy, companionship, and maybe some homemade lasagna you get in return are worth it. And then came the simple payback period calculations, the time it would take for an investment to pay for itself. It's like knowing how many cups of homemade coffee it would take before your fancy espresso machine starts saving you money. This new approach to capital budgeting wasn't perfect, but it was a significant leap forward from the close your eyes and hope for the best strategy of the past. So the Industrial Revolution didn't just mechanize work, it revolutionized capital budgeting. From factories to ROI and payback periods, it was a game changer. And as we'll see, this was just the beginning of a fascinating journey. The 20th century brought sophistication to the game. The 20th century, a time of great leaps and bounds for many fields, and capital budgeting was no exception. The art of allocating resources was about to get a major upgrade. Enter discounted cash flow analysis, or DCF, for those in the know. This method takes into account the time value of money. Now, money is a bit like bread. It's fresher today than it'll be tomorrow. And this concept is at the heart of DCF. It's not just about what you'll earn, but when you'll earn it. Next up, we have net present value, or NPV. This little gem helps us understand the profitability of an investment. In simple terms, if the NPV is positive, it's a thumbs up. If it's negative, well, you might want to rethink that one. And then there's internal rate of return, or IRR. Picture this as the interest rate that makes the NPV zero. It's a bit like Goldilocks porridge. If the IRR is too high, the investment is too risky, too low, and it's not profitable enough. But just right, and you found your sweet spot. But how did we manage all these calculations? Well, we owe a big thank you to the advent of computers and spreadsheets. Suddenly, complex modelling wasn't just for the mathematically gifted. With a few taps on a keyboard, anyone could simulate different scenarios, analyse risks, and make informed decisions. It was a game changer, turning capital budgeting from a game of guesswork into an art of precision. And there you have it. The 20th century didn't just bring us flared trousers and disco music, it brought a new level of sophistication to capital budgeting, transforming it into a precise science. It was a period of great innovation that laid the foundation for the methods we use today. The 20th century made capital budgeting an art of precision. And that, my friends, is a leap worth celebrating. So, here's to the 20th century, the era that made capital budgeting dance to a whole new rhythm. Welcome to the digital age, where big data calls the shots. It's a brave new world out there, and capital budgeting is right in the thick of it. With the advent of technology, we've seen a seismic shift in how businesses approach their finances. Big data and advanced analytics have revolutionized the game, enabling us to make predictions based on patterns and trends. It's like having a crystal ball, only it's powered by algorithms instead of magic. And let's not forget about risk management techniques. In a world that's more interconnected than ever, businesses must account for a wide array of factors, from market volatility to geopolitical uncertainties. It's a complex dance, but one that's crucial for success. Globalization too has left its mark. Capital budgeting is no longer confined by borders. Businesses operate in a global market, diversifying their investments across continents. It's a whole new ballgame. In the digital age, capital budgeting is a global game. So what's next for capital budgeting? Let's peek into the future. As we stand on the precipice of the unknown, we can't help but imagine what's in store. Picture it, artificial intelligence and machine learning, not merely buzzwords, but key players in the capital budgeting landscape. Imagine AI systems that can analyze vast amounts of data, predict trends, and provide invaluable insights for decision-making. Now let's add in sustainable investing, where companies aren't just looking at monetary gains, but also the environmental and social impact of their investments. It's not just about the dollars and cents anymore, it's about the world we leave behind. And let's not forget about continuous innovation. The only constant is change, they say. And in the world of capital budgeting, that change is driven by relentless innovation. New methods, new technologies, new perspectives, all pushing the boundaries of what's possible. The future of capital budgeting, it's as exciting as it gets. So there you have it, a journey through time, exploring the evolution of capital budgeting. From the dawn of civilizations, where the allocation of resources was based more on gut instinct and experience, to the Industrial Revolution, where the concept of return on investment began to take shape. We moved into the 20th century, where techniques became sophisticated with the introduction of discounted cash flow analysis, net present value, and internal rate of return. And let's not forget the role of technology. The digital age has brought us markets at our fingertips, big data, and advanced analytics. Looking to the future, we see the potential for artificial intelligence and machine learning to play a major role. But let's not forget about sustainable investing and continuous innovation. The history of capital budgeting is a long evolving one. And remember, every financial decision you make today is a part of this grand history of capital budgeting. If you enjoyed this journey through the history of capital budgeting, don't forget to like this video and subscribe to our channel for more exciting content.